If you're finding yourself taking more losses in the market than what you should, I'm going to offer you a very practical solution in this video. The truth is, it's not all that difficult to fix. You just have to follow exactly what I share with you in this video. Now, one thing that every trader needs to understand and really embody in their trading is the importance of listening to the market and being able to objectively and unemotionally take on the information, process that information, and be able to make a decision in the market. Now, if you're finding yourself taking more losses than what you should be, it's an indication that there's something wrong with that process. And I want to elaborate on this. I want to offer you a very practical solution that you can implement into your trading to make more money as a trader. Now, the thing we need to understand is the relationship between the trader, yourself, and the market. So we've got the trader, and we've got the market. Now, the market is constantly trying to communicate information to us. And if you have a look at a chart on TradingView or whatever, the information the market's trying to communicate is price over time. That's what the market's trying to communicate. Price over time. What price at what time? Now, to be able to take on this information objectively and then make a decision in alignment with your trading plan is what you have to do as a trader. And it seems like a very simple task to do. But in fact, this is one of the most difficult things when we talk about trading psychology. And most traders never learn to master this skill because most traders are not in a balanced state of mind. They're in either a state of greed or in a state of fear, in a state of pride or in a state of shame, in a state of self-exaggeration or in a state of self-minimization. So therefore, if the market is communicating information to this trader and this trader is in a state of greed, pride, or self-exaggeration because maybe the previous trade they took was a win and they had a very good trading week and now they're exaggerating their own abilities, what's going to happen is that information is going to come into the trader's mind. And because of this self-exaggeration, they're going to be minimizing the risk in the market. They're going to have confirmation bias to only let in information which supports their own beliefs and their own ideas of what they think is going to happen. And they're going to be forcing their own agenda, their own price over time agenda onto the market, their own will onto the market. So this information that the market's trying to communicate to them, the price over time, then comes into the trader's mind and it's distorted or it bounces off because of the self-exaggeration, because the trader is now exaggerating themselves, minimizing the risk in the market. That information that comes in isn't objectively viewed and it isn't objectively acted on. So too, if the trader is in a state of shame or in a state of fear or in a state of self-minimization, if the market is trying to communicate the price over time to that trader, then again, that information is not going to be interpreted clearly. The trader could get the information to their mind, but because of the fear response, again, they're going to have confirmation bias to only let in the information they want, the information that makes them feel comfortable, makes them feel safe. So again, that information is not going to be interpreted clearly, and it's going to be reflected or bounce off the trader's mind. However, if the trader is in a state of balance, and they're neither proud or shamed, they're neither self-exaggerating or self-minimizing, what happens is that information that's communicated to them from the market can be interpreted. And if the market is presenting information to that trader that aligns with their trading plan, what can happen is they can just execute objectively. And that information comes in, they make a rational, poised decision, and then they act if it's in alignment with their trading plan. And ultimately, that's the state you want to get to as a trader. You want to overcome what is called the distortion effect. The distortion effect is mainly confirmation bias that is promoted and exaggerated when you're in a state of emotion, either a pride or a shame, as a survival response, as a fear response, or as a greed response. And confirmation bias, what it does is it filters information that's coming in, and you only take in the information that supports your prior beliefs or your ideas or your agenda or your will. And it blocks out any information that runs counter to that. So if you're in a state of pride or shame and out of that state of balance, the whole summary of this idea here is that you're not going to be seeing the market clearly, and you can't act objectively on the information the market's trying to communicate to you. And as a result, you can't have consistent profitability. In order to have consistent profitability, you have to take in the information the market's trying to communicate to you. And if the market at that point in time aligns with your trading plan, because you've got your trading plan here, if it aligns with that, you then execute in the market. But you can't do that if the information that's coming into you is now distorted because of your own bias, confirmation bias, and because of your own emotional state, your survival state in that moment. So traders who learn to manage their psychology, their pride and shame, the fear and greed, and learn how to manage the distortion effect, the confirmation bias, are those who can see the market clearly and objectively and execute when the market presents an opportunity. However, if you can't do that and you're caught up in your own emotions, then you can't clearly see the market and you're not going to be able to make objective decisions. So in summary, as a trader, you have to learn to manage the self-exaggeration, the pride, and the self-minimization, the shame, in order to take in the information that the market's trying to communicate to you objectively. And if it aligns with your trading plan, you then act. That's how you build consistent profitability. But you ask the question, how can you build consistent profitability if you're not even listening to what the market's trying to communicate to you in the first place? And the ideas that come into your mind are now distorted because of your bias and because of your pride and shame. How can you have consistent profitability? So as a trader, trading psychology and trading mindset mastery is about managing your self-exaggeration, self-minimization, so you can objectively take in the information the market's trying to communicate to you, and if it aligns with your trading plan, act objectively. Okay? So this is part one. Part two, how do we achieve this state? Well, one of the most important things to understand and to implement as a trader is that whenever a trader has a certain idea in their mind, their own will or their own agenda about what they think is going to happen next in the market, that is coming from a state of self-exaggeration. That is coming from a state of, I think I know better than the market. I think I can predict what's going to happen next in the market. And if you're in that state of self-exaggeration, what's going to happen is if the market's trying to communicate to you an idea, you're only going to let in the information that supports that original belief or that bias. For example, if you're looking at euro dollar and you're predicting that it's going to go to the upside on this trade, and what's happening in your mind is the market is setting up in a way that looks similar to a setup in the past. However, every trader knows that that doesn't guarantee that it's going to happen in the future, because there are millions and billions of factors that influence price over time in the market, that influence the market's moves. So as an individual, who are you to, or who am I to predict what's going to happen next in the market? To think we can predict what's going to happen next is coming from a state of self-exaggeration and pride. And whenever we impose our own will and agenda onto the market, it's a little bit silly when you factor in this idea that there are millions of factors that influence price in the market. So if we have that idea of what we think is going to happen next, whenever the market's trying to communicate price over time, that information is going to be distorted. We're only going to let in information that supports our own will, our own agenda, our own expectations, and we're going to block out information that doesn't. And then what's going to happen is we're not going to have the complete picture as a trader. And then we're going to make a decision based on the filtered information that we've only let into our mind. And as a trader, you need to take in the information and make an objective decision based on the information. So what's very, very important is that we drop our own will, agenda, and expectations on the outcome. And we focus on, when we do that, when we don't have an idea or we don't have an agenda, or we don't have a desire for the market to get to a certain place in a certain time, and we can objectively observe the market, what happens is that we let in more information into our mind. And then we can take in that information objectively. We can check it across our trading plan. If it aligns with our trading plan, we then execute. And it's a very simple shift. But the reason why a lot of traders take loss after loss is because they're so caught up in their own will, their own agenda, their own expectations, that they're not even listening to the market in the first place. And they're not taking in the information the market's trying to communicate to them. And the market's never wrong, so the market always has to be respected, because if you're creating a false idea of what you think is going to happen next in the market and you act on that, but you're putting risk on in the real market, you're going to get humbled in that situation. So what's important is you learn to humble yourself. Otherwise, the market's going to do it for you. It's important to humble these expectations and these ideas in your mind so that you can take in the information the market's trying to communicate to you, and you can make a decision in that moment, objectively. Okay? I hope that makes sense. Now, the way you do that is through a questioning process. By coming off and saying that you think you know what's going to happen next in the market, it's coming from that state of self-exaggeration. So what's important is you really question that, and you ask yourself, who am I to try and think that, or try and predict what's going to happen next? Truth is, you don't need to try and predict what's going to happen next. Your job as a trader is to have a proven edge that's outlined in a trading plan, a mechanical trading plan, and then your job is to consistently execute that edge over and over and over and over. And you don't need to be right on the next individual trade. You don't need each trade to be a win, each individual trade. So you don't need to try and predict what's going to happen next. What you need to do is you need to execute your edge over a large enough sample space, and if you have a proven edge, then you're going to end up profitable. So as a trader, you have to ground any expectations, any prideful, self-exaggerated expectations of what you think is going to happen next. And it's done very simply. You just remind yourself, Pat, who am I to try and predict what's going to happen next? There are millions of factors that play on price of a certain currency or a certain commodity or a certain stock or a certain crypto. I have no idea of all those factors. I can't influence those factors. Who am I to try and predict what's going to happen next? And then ground that expectation. And then the question you want to be asking yourself is, does this trade align with my trading plan or not? And if it does, you take the trade. If it doesn't, you don't take the trade. And this helps you transition from this outcome-based thinking that keeps you stuck in the boom and bust cycle, that keeps you stuck with inconsistent results, to process-based thinking, which allows you to eventually approximate the edge you've put into your trading plan and have consistent profitability. Okay? I hope that makes sense. Now, if you haven't already used my Bulletproof Your Mindset tool, that's the tool that helps you implement that exact process. And I've structured it with the questions in that actual tool, and it's very easy to follow, and there's a checklist, and that allows you to implement the correct mindset before every trade you take, to ensure that you're objectively seeing the market, to ensure you're sticking to your trading plan, and to ensure that you don't have the distortion effect kicking in. Okay? Too many traders are taking loss after loss after loss because they're not listening to the market. They're trying to impose their own will onto the market, and they're forcing ideas that the market's just not ready for. Okay? And if you learn to ground your own expectations, your own will, and your own agenda, you can finally listen to the market. You can take on the information. If it aligns with your plan, you execute. If it doesn't, you sit on your hands and wait. Okay? Thank you for watching. Check out the Bulletproof Your Mindset tool in the description. Use that. It'll help. And I look forward to seeing you all in the next video.